Hi everyone, a very good morning and welcome to today's market updates. My name is Edmund. 2 weeks ago, since the 23rd of November, the US dollar has been weakening from 92.61 levels all the way to the current levels of 90.50. So, what was driving the US dollar down to such a multi-year low? The main news was that the US is looking to pump in an additional 1 trillion or slightly higher in terms of stimulus or financial aid into the economic system. So this was reinforced on the 1st of December when Federal Reserve Chairman Mr. Jerome Powell mentioned that the US economy needed further financial stimulus in order to support the economy. And most recently, on the 3rd of December, on a Thursday, US Congress is looking to approve a 908 billion US dollar coronavirus aid plan, which is gaining support from the lawmakers and could be approved as soon as next week. Okay, so aside from this major driver, which was pushing the US dollar for the last 2 weeks or so, we do see the UK pound and also the euro dollar rising as the US dollar was weakening. Just before we go to the technical charts, other events to note today on a Friday, we have the non-farm payrolls data coming out later tonight at 9:30 p.m. And we will also be having the unemployment rate and also average hourly earnings data. Okay, so just a quick look at the US dollar again. Yesterday we saw the US dollar weakening from 91.00 all the way down to 90.55 levels. Okay, so let us move on, skip on to the technical charts. Okay, so again, technical chart wise, the US dollar has been weakening for the last 2 weeks. Most recently from over here, 23rd of November, from 92.6065 levels and dropping all the way to the current levels of 90.69. Yesterday, it touched a low of 90.49, okay, about 90.50. So again, with additional stimulus coming in, it possibly means that the US will be more in debt and more necessary to issue more debt. And of course, with also the recent coronavirus progress developments, a lot of people are viewing that the economic recovery could be very fast and could be on the way, and thus most people are avoiding holding the US dollar as they go to invest in riskier assets such as the S&P 500, Dow Jones, in other words, the US equities. Okay, so nevertheless, with the US dollar weakening, we do see the UK pound strengthening, possibly from the 23rd of November until current prices is went up about 200 pips only. However, the general trend is still on an uptrend. Okay, so the euro dollar is more evident in terms of its bullish move, as the UK pound was also pulled down by negative Brexit negotiations, which are still ongoing for the last couple of months already. There has been no positive developments from the trade negotiations between the UK and the European Union. Okay, so that could be holding back the UK pound, but the general direction is still bullish. Okay, for the euro dollar, it is more straightforward. On the 4-hour charts, on the 23rd of November onwards, it has been moving up since 1.1797 levels all the way to the current levels of 1.2173, moving up about 375 pips. Okay, so if the US dollar still continues to be bearish, of course, the euro dollar will likely strengthen against the US dollar, possibly to 1.2260 levels. Okay. Moving on to gold prices. Gold prices after the steep drop from a high of about 1,960 US dollars on the 9th of November, dropping all the way until 1,766. This was about a 200 US dollar drop. The gold prices finally managed to find some support on a Monday at 1,766 levels, and then after has been rising for about 75 US dollars. Okay, so after a steep and drastic drop, gold prices has been on a very strong recovery, going up about 75 US dollars. So oil prices also managed to pull back up after the oil producing economic countries, OPEC cartel, mentioned that they are looking to reduce oil production on a scheduled basis. So yesterday we saw oil prices moving up from $44.93 all the way up to $46.57. So this was about $1.64 rise up. A quick look at the S&P 500 and also the Dow Jones Industrial Average. Okay, so for the Dow Jones Industrial Average, it's been on a bullish run. Okay, it's been on a bullish run, and currently it's finding some resistance at 30,146 points. And of course, on a daily basis, yesterday it continued its short-term bullish move. Okay, but on the 4-hour charts, it is trading within a consolidation phase, sideways range, and having a resistance at 30,146 levels. S&P 500 is also trading in a consolidative range, having resistance levels at 3,677, and of course, in the short term, it is on a bullish uptrend. Okay. So again, a lot of developments and events and movements happening every single day on the currency and commodity markets. Um, just watch out for tonight's non-farm payrolls data, which is coming out at 9:30 p.m. And we'll see what happens over the weekend. And hopefully, once this financial aid goes through, or just before it goes through, we may see a final push down for the US dollar before consolidating and possibly having some reversal for the US dollar to strengthen. Okay, so watch out for that. Again, have a good trading day ahead, and I'll see you guys again next week for the next market updates. Thank you.